Please welcome to the stage founder and partner at Hiro Capital, Cherry Freeman.
Hi, Forrest. Good to see you. Well done for getting up at, I think it's 4 in the morning where you are. So thanks for joining us. Now, obviously, I know a fair amount about Twin Suns, but I think it would be great if you could tell everybody else a little bit about your company and your vision.
Yes. Twin Suns is a newly formed, independent, global, remote AAA game studio working on our own original IP. We raised our seed round in April of this year with Hiro One-Up, and Hiro is our lead. We stood up the company in the beginning of June and with our first 14 members. And we were playtesting after 3 days, and today, 4 months on, we're 18 team members with more signed and coming in the coming weeks and months. Up to date, we've generated 60 builds and had 60 playtests so far. So we're feeling pretty optimistic about the game we're making, and we're loving the team we're building.
And I remember, Forrest, one of the things you were quite clear about was this incredible team of veterans was going to take all of that experience that they had, but apply it in quite a different way. So building a AAA game, but with a very distinctive approach. Can you tell us a little bit about that?
Yeah, our vision is a sustainable, safe, inclusive, and fun studio where we can build high-quality, timeless franchises on our own IP. We are here to disrupt the way that AAA games are traditionally made. We've seen and heard of too many studios that employ unfair, opaque, exploitative practices around compensation and opportunities, are managed chaotically and wastefully, and are frankly monocultures where only a few can actually succeed and thrive. So we are here working on new standards for ethics, inclusivity, and sustainability in the AAA space.
So I'm keen to understand a little bit about how the idea is playing out in practice. Maybe we'll start a little bit with the investment and then come on to a little bit more about the actual experience of building your first game as Twin Suns. So I know you were looking for funding, you needed to raise funding, you had your team all lined up, you knew what you were going to do, but you didn't have everybody fully on board, and raising the funding was the kind of trigger point to making that happen. How did you think about getting investor ready?
Yeah. So actually, Tim Longo, my co-founder and our CEO and game director, started solo on the founder journey. And Tim gets full credit for all of the initial legwork. This included building the core vision, assembling the core team of people ready to go when the company could be stood up. It was an amazing initial group, everyone, as you mentioned, Jerry, 20-plus-year veterans. Tim found our legal team, which is McNall, and our agency, SCM, and these two were extremely important and critical partners for us in our founder journey. Tim built the initial deck and did the initial pitches, just Tim and SCM. And then I joined, and we refined the company vision, the values, and of course refined the budget and plans, and I joined the pitch meetings. When we were pitching, we had no playable software, and as I mentioned, we hadn't yet stood up the company, so what we were asking for was an investment to stand up the company and create a game prototype. So what we pitched was a dream in the form of a deck with an incredible team, a studio vision. We also presented an overview of the competitive landscapes we were going after and a project thesis. We also had in appendix slides, the budget and high-level plans in case any investor was curious to see numbers. And we did actually end up talking budgets and plans in pretty much every pitch. It was nice to keep the numbers out of the official pitch, but have them at the ready. And when we were pitching, of course, we were constantly and continually looking at the competitive landscape and also working on our forecasts for our first project.
So despite the fact that the team hadn't been stood up yet, the studio wasn't quite yet in existence, you've described quite a lot of the foundations for what you've then gone on to build as being ready when you went out to the market. And I remember that you had multiple options in terms of securing funding for Twin Suns. So what were your criteria for choosing? Because you were in the decision seat, right? So what were your criteria for deciding who you wanted to take money from, who your investment partner was going to be?
We looked for partners who understood and shared our values, the most important to us being people and relationships above all. With Hiro, we actually knew from the first meeting that Hiro was the partner and lead we wanted. Some VCs don't even bother introducing the fund or anyone beyond the people in the meeting. But in the first Hiro meeting, not only was the founding story and vision for Hiro shared, but everyone at Hiro was introduced with equal respect and admiration, no matter their role or tenure. And it was so clear to us that Hiro also values the people and relationships above all. We also wanted investors who would bring games industry experience to provide strategic input and be great sparring partners for us. We wanted a team we could learn from because as first-time founders, we wanted investors who would support us and be honest with us and also believe in us. We wanted investors we were confident would not get in our creative funnel or force us to use precious cycles, educating them on our development processes because they lacked dev goggles or experience in the earliest phases of making a game. Tim, Jeff, myself, and everyone on the team, we've spent our careers working with people who understand game development, so we didn't feel in any way prepared or interested in working with a partner who didn't have a baseline of experience with game development. And probably most importantly, we were looking for partners who we believed that we would enjoy working with. Twin Suns is about a lot, but at its core, it is about all of us rediscovering the joy in working on a game as a team, and we wanted that feeling to extend to our partners as well.
And I guess this is now, what are we, we're maybe 5 months on from that investment, 4 months on. How's that turned out? 4 or 5 months, how has that turned out? Is it as you expected? What's it like having a venture capital fund invested in your company? And were the criteria that you applied with hindsight, do you think they were the right criteria? And I guess following on from that, has your decision been borne out? Are you actually seeing what you expected?
Yeah. I want to correct myself. It actually has been 5. You were right, Cherry. It's just been 4 since we stood up the company. So I think our instincts were correct with both Hiro and OneUp. There's mutual respect, which is extremely important to us. And I can say that we genuinely look forward to all of the meetings and interactions. The support we felt and experienced has far exceeded our hopes and expectations, aside from just good strategic questions that we get and good business and game insights and good intelligence. It's just been really nice to have a group of people who believe in us, who can see in us as much or even greater potential than we can even see in ourselves, and who we feel like are really in our corner and are looking out for us. And that is Hiro 100%. With Ed and Kelly at OneUp, they are just wonderful and give really excellent practical advice. I actually just got some from them yesterday. They've created a OneUp community where every company in the portfolio has one founder who participates, and it's so nice to be part of a bigger group of founders who can support and help each other. And lastly, I just want to say through both Hiro and OneUp, I've been able to connect with a lot of women founders, which has been its own gift.
And Forrest, you've also been providing advice and support to some of the founders in the Hiro portfolio, so I want to thank you for that. As you look back on the last few months, is there anything that you think maybe you would do differently if you got a do-over?
Yes, there's a lot of things. I think, to start, I would have put more effort into my personal intro earlier on. Talking about my work has always been really easy, but talking about myself has always felt extremely difficult and awkward. And the main job in pitching is not to pitch your ideas or your software, but actually to pitch yourself. So you need to land that part well. My advice is just to be sure to leave the potential investors, whoever you're pitching to, with at least one standout accomplishment from your career. Ideally something recent that they can use to help generate enthusiasm for the team. I also found very few potential investors actually understood what I did as an executive producer and what Tim did as a creative director, the scope of work that these roles entail, and the operational aspects of these roles as well. How these roles can actually be mapped somewhat to running a business. I unfortunately realized this pretty late in our fundraising journey, and I wish I had done more to educate potential investors on that from the beginning. Focusing not just on the games that we shipped, but how the processes we ran and the areas we oversaw actually can and do map to running a successful company. I wish that our project forecasts, all of the good work that we did, data mining and presenting that data, and just really thinking about what the game, what our project might generate. I really wish that had been a part of our deck in the appendix alongside with the budget and the plans. We thought that it would add confusion or slowed things down. But the truth is, when we have shown our forecasts, it's only been a benefit for us and helped our position. So I wish we'd included the forecasts in our deck.
One lesson for me as an investor in this space has been that great Excel and PowerPoint does not necessarily mean a great studio. And actually, if you really want to understand that business, you've got to go the extra mile and you've got to be prepared to ask the questions. So that example that you talked about, where you didn't lead with you and who you were, was fine, because it was up to us to spend the time with you and ask you the questions and draw that out. And then when we did, we were totally blown away. So some of the people who are listening to you speak today will be thinking about raising money themselves. Do you have any advice for those studios as they start thinking about that and possibly embarking on that journey?
Yes. So definitely, in the pitch deck, lead with the team. Always lead with the team. The team needs to be up front. Even if you think your idea is the thing, it's the team that the investors are investing in. During the pitch meetings, I always asked questions to understand the experience, the structure, the decision-making processes and priorities of the VC. And we always came trying to empower the VC with information to help them figure out if we were a good fit for them, in addition to giving memorable and shareable information they could use to evangelize us if they wanted to. I always asked directly, what were they concerned about? Was there anything that gave them pause? And Tim would always follow up these questions with, what are you excited about? Or what are you still excited about? What do you think sets us apart? It was a really good way for us to debug our pitch, and this order of questions worked super well for us, and usually led to just really nice insights on both their concerns and the way they saw the opportunity. And of course, good biz dev, if it was clear on our side that we wanted to continue talking, we'd always end and signal our interest with clear next steps. something, Tim and I did the fundraising together, also together with our agency. And I think, our setup worked pretty well. We had a buddy system where whoever wasn't talking observed and noted what was and wasn't working or landing, and also the questions that were being asked. We generally didn't prep for each meeting unless it was an important follow-up meeting, but we always held a debrief to compare what we learned, to give each other feedback, to reflect on the questions raised, make any adjustments to the deck. We also, every time, discuss the risks and potential benefits of a possible partnership. We also would share in the debriefs if we perceived that someone treated each of us differently from each other, and this was always a huge red flag that we noted, and usually it was a deal breaker. Our agency set up all of the meetings and drove the follow-ups. As I mentioned, they were also usually there in most of the meetings. It was a really great support, especially since we are first-time founders, and we're very much new to this. I would say also, throughout the whole time that we were pitching, I really took advantage of the experience and generosity of friends and friends of friends outside of and adjacent to the games industry. Various lawyer friends, one who specializes in working with VCs, another who does sanctions law, since we were looking at investments from VCs and strategics outside of the US, friends in finance and HR, just to learn and get advice. I also had my life partner who worked in sales and advised us throughout, and he told me something that really stayed with me, which is that in sales and biz dev, any relationship or deal can make or break an individual career, or even a whole organization. And this was really helpful for me to always keep in mind when we were pitching. I think it was helpful because even though it felt and seemed like the VCs were the ones with the power and the money to give, they actually had and have a lot on the line as well. Not only for the fund, but for individuals personally, and it was good to be aware that that's also a lens that they're using when looking at potentially investing in us. Lastly, I reached out to some game COOs to seek advice, learn about how they approach their work, and start to build my network of COOs, because that's what I'm doing in TwinSense before I started full time.
Great.
Yeah, I think, I would also just say, be ready, because, when a VC decides that they want to go with you, it can go fast. So just always know what's important for you, what your goals are, if and where you have lines to draw, what compromises you'd feel comfortable with, and it's always good to have a handle on that. Sometimes these things change with the different talks you might have. It's definitely critical to make sure that all of these things are aligned within your founder group, and also just very sensible that your legal team understands these priorities. It will make negotiations very fast. And I mentioned when the VCs have decided, it can go fast, but the bright ones like Hiro will respect your speed. I'll also just add, be ready for due diligence with any information or materials you need for negotiating, closing the deal, standing up the company. And definitely treat due diligence as a two-way street, not just, you're getting investigated, but, you should also investigate the VC and ask any questions that you need to ask. A lot of people like to back channel to find out more info about a VC. And for us, we didn't do that. We didn't feel the need to do it because of our relationships and the reputations of the people that we were working with. So our best and right approach was just very direct. And what we did was we just put together a list of all the questions and concerns, and Cherry, it was you actually who, were so generous with your time, and you led the team, just made yourself available for us and talked us through everything, and actually educated us, helped us learn about just anything that we were curious about, and things that we had zero experience with. So even when we were negotiating and closing, it already felt like the partnership that we had been looking for. I really hope that everyone who goes through a similar journey can have as good of an experience as we had.
I'm kind of blown
Yeah.
away by the forensic attention to detail through that process. I had no idea there was so much to take from it. But I think that's partly why you guys are such an amazing team. So thank you, Forrest. Twin sons, watch this studio. They're going to be huge. Okay, I'm going to move on now to tell you a little bit about Hiro Capital and what it's like to raise money from the investor perspective, and what it is that we're looking for, and hopefully that will be helpful to you. So just a little bit of an introduction to me. I'm one of the 3 founding partners at Hiro Capital. If you want to scan the slide quickly, I think the main thing to know is it's been busy, and it's been a bit of a roller coaster, and there's some amazing life experiences in there which have culminated in 20 investments in games technology, metaverse businesses, and some of the studios that we've invested in, that I'm on the board of, are on this slide, founded by some unbelievable teams across Europe and the US. And when we founded Hiro just over about 2.5 years ago, it was a time in which if you went out saying we're raising money for a games fund, people looked at you like you were a little bit crazy. We didn't go out to say we're a metaverse fund. That would have literally finished us off. But we named the fund Hiro after Hiro protagonist, main character from Neil Stephenson's Snow Crash. A little nod to those on the inside about who we are and what we're about. But also because fundamentally, if you play a game, if you play a sport, and you win, you are the hero. But also, if you found a company, if you manage a studio, you're a hero too. And so, the founding ethos of the Hiro Fund is that we're here to find great founders and great teams, and to support and back them and help them to be as successful as they can be. We're quite a big team. There's 10 or 11 of us, and none of us is the finished article. We've all got our gaps, so we surround ourselves by people who know more than we do, and we have experts in the team in everything from esports to game design and retention, and most recently to blockchain and blockchain investments. And I have 2 fantastic co-founding partners in the fund, Luke Alvarez and Ian Livingston, both with fantastic pedigrees, having founded and scaled their own games businesses, in Ian's case, many times over, and with extraordinary success. But when you get funding from Hiro Capital, that's what you get. You get this team, and we're all out there, and we are batting for you, and we will do whatever it takes, whatever you need from us, to help you to be successful. If you think that when you raise investment, the funder is somehow in charge, has control, is telling you what to do, can I just say it is completely the opposite. And we'll come on to talk about that in a bit more detail. But effectively, we work for you. Across the team, we have some big successes behind us. Most of these are Ian's, but we also have some pretty successful businesses that aren't on this slide that are just worth hundreds of millions as opposed to unicorn businesses. But what's really happened is the pace at which these businesses are scaling and becoming super valuable is just accelerating. Ian alone has had 5 unicorn exits as founder, and then also as early stage investor. And one of the founding ethoses of the business is that we want to support founders to retain control of their businesses. Founders sometimes worry, if I take investment if I sell equity in my business, am I giving up control? And the answer is quite the opposite. Talk to any founder who's raised investment, and I'm talking about venture as opposed to later stage private equity, then what they will tell you is we are minority shareholders, we don't have any controls over the business, it's your company, it's your direction, we are backing you, and that is a fundamental difference to the control that you cede when you work with other sorts of partners. We've made 20 investments to date, a few more in the works at the moment. You can see them on this slide. Everything from kind of streaming technology business such as Live, through to player data, which is a sports tech business. It's allowing you to replay the match, after the event, seeing your players move around the screen, through to Double Loot Games in California, founded by Emily Greer, through to Keen, who are a German studio making a very exciting game that you'll hear more about in due course, and Forever, Instant Games technology distribution platform. So you may know some of these companies, and if you do know them, it's probably, and you are thinking about raising funding, I'm sure you can reach out and ask for a bit of advice. One of the key requirements of any business we invest in is that they have fantastic teams who everybody wants to work with. And we have to be quite humble about that, because at the end of the day, a good studio will have their pick of investors. And so we need to be clear about why you might choose to work with us. And what we hear from the teams that we back that is, I think, distinctive about Hiro is a couple of things. One is that, we're all entrepreneurs by background. And what that means is we have some empathy with the journey that you're going on. We remember what it's like to have to do everything, every single thing in the office, from taking out the rubbish to making the coffees for everyone to figuring out how to make payroll every month. And we also understand that running a business is not the same as running a spreadsheet, and that real life is messy and it doesn't go in a straight line. So there's a lot of empathy and support, and we have made a lot of mistakes scaling our own businesses, and we've got the scars from that. And we would really like to help you not to make the same mistakes again. But we're also, first and foremost, what we're interested in is your intellectual property. Forrest talked about the importance of the team, and we'll come on to talk about that. But first and foremost, what we're backing is what you're building, what you're creating. We are games geeks, we're product geeks, we like tech, and we want to get excited and passionate about that. And I know from the teams that we've backed, not just the 3 on this slide, but more widely, that's something that they see as fundamentally important, because if you're not passionate about what they're building, if you're just passionate about the numbers that result from it, then ultimately there'll be a disconnect. And I don't think that you can back and help scale a fantastically successful business for the long term if they don't have at the heart a product, a concept, creativity that you can feel really passionate about. But, we do still have to apply our investment criteria, and I think you'll find that certainly if you're talking to people who understand and value intellectual property, that there'll be some consistency here. So this is worth thinking about, whoever you decide you want to try and raise money from. Of course, a great team, a team that we can back, which doesn't have to be a team with a very established track record. Of course, that helps to de-risk an investment. But fundamentally, it's just about we all know that no one is the finished article. We've all got our gaps. Do you know what yours are? Do you know how you're going to fill those as you scale your business? Are you clear about your vision? Do you know how to attract and retain talent around you? These are the things that make a great founder, great founding team. But we're also looking for a deep moat, some reason why what you're building will last and nobody else can do it in the same way that you do it. It will have some long-term value. It will continue to evolve, continue to develop. So all of that learning and IP that you generate in the first few years of your business should go on to make you disproportionately successful down the road. And can it be big? How big can it be? Fundamentally, a venture capital fund is looking for a very big return on their investment. They take risk because they know that while some of the businesses that they invest in are not going to do particularly well, there should be some that will really blow the lights out. So you can make our job a little bit easier if you do some of the things that Forrest was talking about just a while ago. If you put yourself in the shoes of the person that you're pitching to, what is it that we really want to understand? You know, we want to understand why you. What is it about what you're doing that is different, that will scale? At the end of the day, what will it look like? You know, what will the result of this investment look like? So it's not simply, I want to build this game. It's got to be, I want to build this studio. This studio will be different and it will be successful because of these characteristics. This is how we'll deploy those characteristics in a repeatable way across multiple pieces of IP, and that will give us many shots on goal. By the way, here's my first piece of IP. Here's how we're thinking about it. Here's why it's exciting. Here's why it's different to everyone else. And at the end of the day, this is how much demand there is for it, and here's how it will continue to grow and evolve and monetize. So these are the things that we have to understand. You can make our lives a lot easier if you can help to explain to us how you're going to achieve that. But I should say that venture capital is not for everyone. You know, your investment fund is ultimately looking for a return. There needs to be an exit at some point at which they can sell their shareholding in your company, and they want growth. You know, we want rapid, ambitious growth. There are many other reasons to found a business. You know, if you are passionate about something that you want to build and you want to be in charge of your lifestyle, in charge of your studio, you want to be calling the shots, and you don't want any pressure to deliver specific financial outcomes, it's more of a lifestyle business, it's more of an experiential business, then I think venture funding isn't for you. And you might be better off looking at how you finance some of the work that you're doing, possibly with publisher funding. So something to really think about. It isn't for everyone, and it doesn't work for every studio. Please do look out for our events. Spike and Sam, who are in the room over there, run our Dark Star events. These are for game studios all across the world who might be interested in raising venture capital funding now or in the future. They are largely run by founders of our portfolio companies who will tell you with brutal honesty what it's like to raise funding and what it's like to have an investor, be it Hiro or anyone else. And you'd all be very welcome at those. And by the way, this is not just lip service. We do actually invest in businesses and studios that come and attend those events. You might want to go and have a look for Happy Volcano. This is their game, a little image from their game, You Suck at Parking. Small Belgian studio making something really exciting and really fun, and they're here today, so you'll be able to go look for them. But they came to one of our Dark Star events. They listened to what it's like to raise VC funding. They decided it was for them, and then they came and chatted to us. So, and we would welcome conversations with any of you. So, that's it from me. Thank you so much for listening, and I'll hand over.
Great. Thank you, Sherry. Fantastic, yes, round of applause. I think we're going to have some questions actually, Sherry, if that's okay. So we won't let you escape just yet. If anybody has any questions, just have a think about that. You can ask questions online as well. I'm just monitoring the live feed that we've got. I don't want to be negative. I mean, things look brilliant and you've got some really good relationships, obviously, with the games companies that you've invested in. But what happens if things break down, go wrong? Do you build that into the deals that you do with the companies?
Do you mean go wrong in terms of the relationship?
Yes.
Well, I mean, if the relationship goes wrong, so for example, the founding team doesn't want to engage with us or is not enjoying the interaction, or there's a difference of view as to strategy, that's up to them. I mean, fundamentally, our job is to figure out who we should support and to offer support, but it's not up to us to force it on that company. So if we get to a point where a relationship has broken down, really the problem is for us, because we no longer have influence and we can no longer help that company to achieve the outcome. At that point, we just have to step back and let them get on with it. And that is just in the nature of being a minority shareholder. We don't control the companies we invest in. We're there They tolerate us. And we have to earn our keep.
Yeah. Good stuff. Anybody got any questions? Yes, I'll come to the back. I'll get fitter doing this.
Hi, Terry. You mentioned earlier that you're looking for companies that are making great games with great gameplay. I'm wondering how you evaluate what is great gameplay. I'm assuming that you look at prototypes, but how do you look at prototypes? I'd love to know, understand a bit more about the exact process there.
So there's a few parts to the answer to that question, and the first comes from simply playing a lot of games. And we are seeing maybe somewhere between 2,000 and 3,000 game studios every year. One of the things that was very important to us when we founded the fund was that you didn't have to have some sort of old boys network to be able to get your pitch deck in front of us. You don't need to network to us. So every single pitch deck that we receive, we read, and we consider. And so as a consequence of that, we then meet a lot of teams and we play a lot of games. And so just having that deep experience helps us to identify what's new, what's original, what's stand out. So that's part of the answer. The other part of the answer is clearly there's a slightly more structured analytical process to evaluating that as well. And at the point at which an individual game has gone through that initial sort of taste check, if you like, and don't forget, of course, we've got the likes of Ian Livingston in the team, who has a fair amount of pattern recognition in spotting this. If it's gone through that, then we go to a games panel, and we're asking them very structured questions, which cover everything from first-time user experience, how easy is it to get started, what's the activation energy, how intuitive is it, can I figure out the rules easily without having to watch a tutorial, through to when I've experienced, can I describe the core game loop, does it make sense, and when I've experienced it, what is there in that in terms of retention layer that's bringing me back and making me want to do it again, where are the rewards. So there's a structured process, but we're also clearly mindful of the fact that this is an art as well as a science, and so it does also sometimes come down to kind of judgment and feel. We do look for reference points. What's this like? What's it inspired by? And you can help actually when you pitch your game by explaining that to us. So it's inspired by this, but it's different in these ways, and here's why it's going to succeed, and this is the gap in the market, this is the player, and this is why we think they're going to want to play this as opposed to anything else.
Great, thanks for the question. Anybody else got a question about VC investment? Yes, bring the mic.
Hi guys, thank you very much for the presentation. What I'd like to know is, when studios come to you, are you looking for them to have an exit strategy in mind, when they're pitching, or how does that work?
That is the honest answer to that question is yes and no. The no part of the answer is nobody builds a successful business by just thinking about how they're going to sell it. It is a marathon, it's not a sprint. Nobody tells you when you start a business it actually takes quite a long time. And so you've got to be committed to and passionate about what you're building, and there has to be joy and reward from what you then bring to the market and how it's experienced by players. So that's fundamental. If you're only interested in what the exit looks like, then you're not a true creative. And so that probably wouldn't appeal to us. On the other hand, if you come and you say, well, look, I'm making a first-person shooter, it's a premium game, it's going to be console only, and we're not going to update it, and we're not going to have a live ops team, there's not going to be any DLC, there'll be no UGC, there won't be any social. And I'm like, that might not be a game that's going to have particularly huge revenue potential, there's not going to be a huge market opportunity for it, I can't really see what the exit is there. So then you might want to step back and think, probably VC funding isn't going to be the right route. So it's a slightly sort of round the houses way of saying, you need to understand how you're going to make your studio, and keep focusing on studio, not game, how you're going to make your studio really successful. and really valuable. You don't necessarily need to know, and then I'm going to IPO it, or I'm going to sell it to this trade buyer.
Great, thank you for your question. I think we've got time for one more. If anybody's got anything they want to ask Cherry, I've got a question. Yeah, cool.
Hi, super interesting talk. I just have a really quick question. Obviously, when you're sort of pitching, you have expectations of showing the minimum viable product. I mean, what is your definition of minimum viable product? You know, are you just guys looking for the core mechanics of the game, or are you sort of looking a lot more sort of finished product? Yeah.
There isn't a black and white answer to that. We invested in Twin Suns on the back of no product, nothing to demonstrate, but a really clear articulation of what the core game loop would be, what the retention layer would be, and some artwork, and some benchmarking, and some target player definition, and some market sizing, and that was enough for us to be confident that we could see how that would pan out. But we've also invested in studios who have live games with KPIs that we can assess and come up with our lifetime, customer lifetime value calculations, and we can do cohort analysis. So it's a pretty wide spectrum. I think what I would say is, wherever you are in that, you do need to be able to articulate really clearly what the future looks like. Otherwise, we can't understand it. And also how you either have or will build the capability to be able to deliver that. So I wouldn't overly index on exactly what you have and what the definition of MVP is, but I think more about that business plan, that operational plan, that creative plan, how you're going to distill it into something simple that I can understand in a reasonably short space of time.
Super. Actually, we just had a question from our watchers online. Do you see any preferences towards specific platforms, example mobile versus PC console, or genres like a casual puzzle that would make a game or studio more likely to be funded?
We generally have a preference. The real question there is, how do you build a game that's got a big market opportunity and can therefore be very valuable in the medium term? So I think, I wouldn't want to be too prescriptive, but generally, if you have a cross-platform game or your mobile game, you've got a much bigger audience. If you have a game with some sort of, live ops mechanic where you're continuing to iterate, then again, you've got other ways to monetize your player base. If you have a game that has really fantastic long-term retention, then you've got a game that's going to be able to have a much higher customer lifetime value. But on the other hand, if you make a really successful, really simple, really easy to play game that's super casual, maybe you'll have a really low cost per install. So these are the things you just need to have thought through to figure out, if I'm going to have a casual game, I need to be able to figure out how I'm going to get a lot of users, because I know they're going to churn quite quickly. If you're building a game with really long-term retention mechanics, then you've got a slightly different question, which is how am I going to monetize them over that period? So what I'm getting at is, you need to think about this, and you need to you can't just be driven by your passion to create something because you have a great idea and you play a lot of video games and you know what's good and you know what people are going to like, but also how you're going to turn that into a business.
Great, thank you for that question, Enrique, online. Have you mentioned any figures yet about what you invest, what kind of figures?
We've invested anything from €1 million to 10 million euros. We classically invest at Series A and Series B, but we've also invested at seed, and we've also invested at Series C. I think the challenge we have is, if we see something fantastic, it's hard to say no.
Great stuff. Unfortunately, we've run out of time, but a big round of applause, I think, for Cherry Freeman there. That was brilliant. Thank you.
Thanks.
Fantastic. Okay, it's lunch. So hopefully food is being served outside here in the building. If you're watching on the stream, I hope you have a nice lunch at home as well. We'll be back at 2 p.m. with the Games Investment Panel presented by James Batchelor. Thanks very much.